Our mission at 360 Mortgage Solutions is all around financial freedom and financial security for all Australians. But who am I? So from a really young age, like 90% of every child, I wanted to become a school teacher growing up, to the point that I went to university and did 3/4 of a degree in behavioural studies and education. It was at that point that I realised I don't actually want to teach children. Children are annoying. Sorry. I love them. But I really didn't want to teach children. So I vetoed that and I fell into a job working for Commonwealth Bank. It was slightly over 10 years that I worked for Commonwealth Bank, but there I learnt my two favourite jobs were working in the home loans department, where I got to put together loans and help people achieve their financial goals, but also when I did coaching and training of staff to really help teach them what they needed to know. So it was late 2016 when I had a young baby and a young son. I said to my husband, I want to quit work altogether and I want to open up a new business and become a mortgage broker. So after he had his little meltdown, 360 Mortgage Solutions was opened, and I from day one wanted to specialise in first home buying. And the reason I did, this morning at 8:30, I was driving to work and I got a phone call from a settlement I had the night before. And he just wanted to say how much he still can't believe to this moment that he had the keys to his new home and he's finally a homeowner. Get a bit teary because I love it. That's what I live for. That's what I started this business for, and that's why I keep doing it. If you were to say to me, Maryanne, what is the most common question you get from a first home buyer? Ta-da! How much deposit do I need? So I thought I'd do a dummy estimate on what deposit do you need so that you can get your head around all the numbers. On this side, you'll see I've estimated a whole lot of costs. So anytime I say plus costs, these are what I'm talking about. So you can see that I've got based on a purchase price of $500,000, and that's really quite strategic. The reason I chose a $500,000 is because for a first-time buyer, the most common exemption they can get that you're entitled to is a waiver of stamp duty. So as long as you've purchased for $500,000 and below, you can get your stamp duty waived. Once you tip over that $500,000, you start to incur more costs, which means you need more deposit. So for the sake of tonight, we're going to set it at a purchase price of $500,000. So I've got building a pest inspection. I've budgeted for $500. We're going to hear from Les a bit later, but it's always something I'm passionate about. So if you're a client of mine, you're budgeting for a building and pest inspection. We've also looked at conveyancing, and again, I've budgeted for $2,000. This could be more depending on the searches that you want to do. It could be slightly less. Carolyn will talk us through that a little bit later, but we're budgeting for $2,000 for that. Mortgage registration. So even though we don't have those old paper mortgages anymore, the government is still going to charge you $209 to electronically process your mortgage, and transfer duty of $1,464 as well. So you can see here I've got 3 different figures, horrible, not so bad, and great, that you need for a deposit. And the reason there's 3 different figures is because the answer to how much deposit do you need is how long's a piece of string. If you qualify for certain grants, then your deposit will be different for if you don't qualify for grants. If you have guarantors, it'll be different again. So in this first instance, at let's round it up to $45,000, sorry. If you have no parents that are happy to go guarantor and you don't qualify for the scheme for whatever reason, then you need to have, my advice would be, at 8% deposit at minimum. So 8% deposit means the bank will lend you the rest, but it's a riskier loan for them because they're risking a fair bit more. So they're going to charge you what we call lender's mortgage insurance. And that effectively is an insurance policy that you pay for that protects the bank. So they'll add that to the loan at settlement, but you could get away with about $45,000 in the bank and you're getting in with the minimum deposit needed. Then if we look at the next one, if you qualify for a scheme, and we're going to look at the schemes in the next slide, then you could get in with a 5% deposit plus costs, which is about $29,000-$30,000. And then the last one, 0. So it looks really good. If you've got parents that are beautiful and able and willing to go guarantor for you, then you can get into your property with no deposit at all. Having said that, I still encourage first home buyers to have some money in their account beforehand, because the more deposit you have, the less you have to borrow, therefore the more you save. But also, being a mum myself, I'd want my kids to have a bit of hurt money and show that they can put some money towards it as well. So let's look at the grants. So we've got quite a few grants. We're actually really lucky at the moment for first home buyers. We've got the First Homeowners Grant, and that's been around for quite a few years, so you probably most likely have heard of that one. And that's the $15,000 that can go towards your deposit for purchasing or building a brand new property. There's also the First Home Guarantee and the Regional First Home Buyers Scheme. They're two very similar. They're basically the same, but there's just extra positions for a regional one. They're where you have a 5% deposit. So if you can get a 5% deposit and you qualify for the scheme, the government effectively will be your guarantor. I'm doing a lot of loans under this scheme at the moment, and it's purely because A, you need less cash to get into the market, but B, the government backing you means you don't have those extra lender's mortgage insurance costs, and that's really good savings for you long-term and short-term. Then we have the Family Home Guarantee. So this is for any parents who are single parents, I should say. So if you're a single parent and you've got a dependent or dependents, you can get into your property with a 2% deposit. The beauty of this one is it's not just for first home buyers, so it can be someone who's owned previously and wanting to get back into the market. Coming soon, we have the Help to Buy scheme. So the Help to Buy scheme was one of Labor's promises to get into Parliament, and that's where they will purchase 40% of the property and you purchase 60%. And then when you're able to, you can buy them out, or later down the track, you can sell and they take their cut and you take yours. And finally, and I've mentioned this already, but there's the Family Guarantee. So if you have a parent or parents who are able to and want to go guarantor for you, then you can go under a family guarantee and effectively borrow the purchase price plus costs. I've seen this work really well with some clients when they've had quite a good savings, but they've purchased a fixer-upper, and that way they can put their savings into the renovations, get the property equity up really quickly, and then kick the guarantors off as soon as possible. All right, so what is it that banks are looking for when they're looking at an application? So the key things that they're looking for, and I've already addressed the first two. The first one, equity position, aka how much deposit are you putting in? It's a much less riskier loan if they've got a guarantor, whether it's the government or your parents, versus if you're borrowing the absolute maximum possible. They'll also look at your servicing position, aka how much you can borrow. So they'll look at what's all the income coming into your households. After all your expenses are paid, you've paid all your bills and all your debts, how much is left to cover that loan? And the good thing is they actually add a buffer on that as well, so that they're forecasting interest rates rising to make sure that you can still afford the loan when that happens. In addition to that, they're going to look at your credit file and your credit score. With the implementation of comprehensive credit reporting, it is more important now more than ever to make sure that you've got a really good, strong credit file. They'll also look at your employment. Some banks have a great appetite for newly employed, other banks don't like to touch it. They'll look at buy now, pay later accounts. So I have a lot of clients say, oh, I hardly use it, or I've only used it that one time, but they'll look for things like that to make sure that you're not using too much and spending above your means. And that takes me to point 6, where they'll look at your living expenses. So they look at how much you're spending. And a lot of clients say, oh, that's really frustrating because I'm only spending that much right now because of this. But the reality is they want to make sure that you can afford the lifestyle that you're accustomed to when you move into the home, so that you're not going from Uber Eats every night to baked beans on toast every night. So if you have a concern about your living expenses, my advice would be to rein it in for 3 months. If you can cope with that and it's not awful, then you can show yourself and the bank that your living expenses are okay. So what should you be looking for? So firstly, obviously I'm a mortgage broker. I'm going to say you should be looking for a good mortgage broker. I know 2 that are in the room tonight, but jokes aside, you should be looking for someone that's happy to educate you along the way. I can't tell you the amount of times I get questions from clients on the phone that have nothing to do with me. They might be a solicitor type question, but at least they know they can come to me and ask. And if it's not for me, I'll point them in the right direction. Or if it is something I can help with, then I will. You should also be looking for someone who has a good network of specialists around them. So just this morning, Carolyn and I, or Carolyn's assistant and I, were talking on the phone about a client whose settlement's up and coming. And we were able to nut through the things that need to be ticked off without even involving the client. That's the kind of network that you really want to put your trust in, because when it comes to your first home, it can make something that's stressful a lot less stressful. And then finally, this is a really important one. You want to make sure that whatever lender you do a pre-approval with, it's a fully assessed pre-approval, not a generic computer says, yep, you're good to go. To be honest with you, a computer-assessed pre-approval means nothing. I've seen a lot of times where a client has a pre-approval that's just generic, and then they put an offer, it all goes south, and they end up calling me and saying, what can I do? What do I do? A fully assessed pre-approval is completely different. It's where a credit officer has actually opened the application, looked through the calculations, looked through, asked any questions they need to ask, and really got familiar with that client and yourselves and with what's going on. Then they've said, yes, go find a property and we're happy to lend you some money. So I would always say fully assessed pre-approval. So my top recommendations for what you should do right now to help you prepare regardless of where you are in your home buying journey. Number one, get a free copy of your credit file. So Equifax allow you to download a free copy each year. And I would strongly encourage you to grab a copy and have a look at it. And if you don't know what you're looking at and if it looks scary or if it looks okay, talk to the mortgage broker because they'll be able to tell you. You'll be surprised how many times, even with very financially savvy clients, they've grabbed a copy of their credit file and seen that there's actually quite a few inquiries that could be a problem or some defaults, and getting them fixed up now before you're ready to start go house hunting is much, much better. I'd then encourage you to find out which grant you're eligible for, if any. And I've got some paper down the front on the grants so you can have a look and see if you qualify. But the grants save you a lot of money. So I'd encourage you to have a look at what grants you're eligible for. And once you have, you can work with your mortgage broker to find out what deposit amount do you need. Then you can really start to work out how far away in my journey am I? Do I have savings I still need to do? Or am I ready to rock and roll right now? And then finally, I would say talk to your mortgage broker. And again, I've said mortgage broker a lot, not bank. The reason I say that is because as a mortgage broker, we have access to over 40 different banks and lenders. That's 40 different policies, 40 different appetites that we have access to. Whereas if you go to your bank, that's one policy, one appetite. I've had a lot of clients that have been declined with their bank and they come to me and we get it approved really, really quickly because it's quite straightforward. And that's it from me. So, thank you. Now I would love to introduce Janet. So Janet owns and operates Capstone Property Solutions, which is a boutique property management agency based in Shayla Park. Janet has over 30 years property management experience in both the public and private sectors and has owned property management agencies for over 15 years. Janet is also an experienced property investor and has encouraged her children to invest in property from a young age. Janet is going to give you an overview on rent vesting, which may provide you with a perspective on your journey towards home ownership.
Thank you everyone for having me tonight. So my talk tonight, even though I'm property manager, it's not really about property management tonight. It's more giving you a bit of an overview of a different journey that you can take towards home ownership. So probably the term is now called rent vesting, and to make it really simple, it's where you stay renting, but you buy a property that you invest in. And there's a number of reasons that people do this. So probably the most common is because they choose a location they want to live in and they can't afford to buy there. So they live in that location and rent, and they buy a property in a location that's more affordable to them. So that's the most common way. It also encompasses, you might have a family situation where you need a 3-bedroom house and a yard for the dog. You can't afford in Cornubia to buy a 3-bedroom house with a yard for the dog, so you'll rent a place doing that, and you might buy a unit on Bryant's Road. So you can afford to buy a townhouse or a unit on Bryant's Road rather than, somewhere to live. There's also people, and certainly clients of mine, who make an active choice to rent forever and build up a property portfolio. So there's a whole lot of different ways to do it, and there are some financial advisors that will tell you that this is a really good financial strategy. I'm not here to talk about financial strategies, but you will find people who will say that this is a great idea and it allows you to build a property portfolio over time and build wealth through property. So there's a whole lot of different reasons why people do it. Another common reason is that you want the flexibility. Maybe you're in employment that takes you want to move around the country. Renting allows you to do that, and then you have your investment property that's there and you're still in the market, and later you might come back and buy in that area. So, but certainly the most common reason is, as I said, that people want to live in a certain area where their lifestyle is. They want to maintain that lifestyle and they can't afford to buy in that area, so they buy an investment property. There are a number of benefits to doing this, as I've explained. One was flexibility. Another thing is that, of course, your expenses in an investment property are tax deductible. So there may be some financial reason that this will help you to get ahead. It's really important, though, that if you're thinking that this might be a strategy for you, is that you get a lot of advice. Certainly Maryanne can give you some advice. I don't know whether grants would still be available to you if you went down this path, and it's a really important thing to consider because it's such a large amount of money that goes towards your deposit. The other things to consider, of course, is that, being a landlord, there are some risks with tenancies and things like that. And of course, I'm going to say that's the reason you get an excellent property manager to look after it for you, so you never have to worry about that. The other things are certainly, as I said, the pros were the flexibility, the ability to build wealth through property, the ability to pay some of that property off using some tax advantages, and then selling it and having a much larger deposit when you go to buy your dream home. So they're the sorts of benefits. There are some negatives, and one of the main negatives, I think, is that a lot of people feel in a rental property it's not their home. So, of course, you've got people like me that are going to check on how you keep your house every few months, and you can't do renovations to the property. So there are some challenges with that. There are a lot of people who think that, rent money is dead money. So that's why it's really important that you would get advice from like a financial planner, from Maryanne as a mortgage broker, to look at the types of loans types of financial institutions that would like this sort of strategy, and also to really think about how you will feel renting long term. If it's something that you're happy to do, it may be the right strategy for you. So overall, I guess the benefits of it, I believe that you would be better to be in the market than not in the market. So I think it's a viable strategy for you to consider. And in fact, I have a number of clients who both have an investment property that I manage and they rent through me. So it definitely does work for them, and it does provide them with that flexibility. So I hope that's given you a bit of an overview and certainly given you another perspective on your journey to home ownership. And thank you for listening to me.
Now we have Les from Resi Inspection. Resi Inspection helps first home buyers make a confident and educated decision and focuses on not just providing their clients with a building and pest report, but also ensuring that their clients understand the report and the home that they're buying. Les is going to talk us through the importance of a pest inspection when purchasing your home.
So building and pest inspections, it's often something that's very brief in your buying experience, but we're there for a few hours, you get this report, and it's a bit of a flash in the pan in this experience because there's a lot of excitement, especially if you're first home buyers around buying. But to me, especially, it's really important because what our aim is to be able to give you peace of mind. Now, that is, when we talk about peace of mind, it's about understanding exactly what you're buying. I guess what we're looking for is when you go to a house, when you go to an open home, you're going to look for all the good things in the home. The agent's going to show you all the features, you're going to read through the list, you're going to get excited about the house. Now, it's my job to come in and tell you all of the things that are wrong with the house. Sometimes it can be scary. The reports are long, they're worded in technical language and building language. And I guess why I say this is so important is, one, I don't want you to get scared off by not understanding. I've seen first home buyers get scared off a good home because they haven't really understood what they're buying and it's a good home. Often when you're buying, and especially as a first home buyer, you're buying in the lower end. You're buying something that's older, you're buying something that's had some problems, or it's got some issues that might need repair, because that's the level that most people start. But at the same time, we're going to put that in the report, but it's just about understanding what that means for you. What it means for you, because when we're looking at something, it's about talking to us, I guess, as the building and pest people, not just understanding and reading the report, but having us interpret that for you. What, like this says, what are you paying for when you get that report? What you're trying to do is understand and make an educated decision. That's the primary reason. It's not going to be a guarantee of anything, but what it is getting somebody, I haven't done a recent calculation, but I've done over 5,000 inspections in my time as an inspector. That means I do this every day. I have found things when I walk up to a property just because I know what I'm looking for. It's about understanding that and what that means. So a building inspection they're actually two different types of inspections. Sometimes they're done by two different people. I'm qualified for both. So there's building inspection, then there's a timber pest inspection. We're not looking for cockroaches, we're not looking for ants. We're looking for timber pest, or what can be described as wood destroying organisms, right? And so why we're looking for those is the majority of houses in Brisbane have a timber frame. And when we're looking for, even a brick home on the outside normally has a timber frame on the inside. If the termites get into the home, or if decay happens in the home, it can destroy structural members. That's what we're looking for. I'm also going to cover what they are not, and then some things that you can look for. Now, when we're looking for major defects, when we're doing a building inspection and a timber pest inspection, we're dealing with standards, right? What we're doing is what we call a visual inspection. We do use some tools, we do use some things to help us along that way, but it's a non-invasive inspection. We can't see through the walls, we can't and actually break things open at that point. So what we're doing is what we call a visual inspection. There's limitations to what we do, but what we are doing is looking for indications of major defects mainly. Some of them are things you want to walk away from. Some of them are things that can actually easily be fixed, right? Even though it's classed as a major defect, sometimes it's only a couple of $1,000s to repair it. So then we're looking at minor defects as well. Generally, we're not talking about minor defects a lot when we're doing our inspection. We're covering it and looking at it in a general way. Some of the things we'll mention in the report, but most of the time we're just commenting on a general minor conditions, right? And then we're also looking for things that can lead to major problems. A lot of those are drainage and other damage, or possible poor workmanship. A lot of DIY work happens, especially in older homes. And what we're doing is we're comparing the property you're looking at with something that's been maintained well around about the same age. We're not looking at a 50-year-old home compared to a new building, right? We're not actually also looking, I'll go into some of the things we're not looking at soon. Timber pest inspection is actually broader than a termite inspection. There's different types of inspections we do as pest controllers, and the timber pest or pre-purchase timber pest inspection covers multiple things, which include termites, decay, which is basically rotting timber, borers, conditions conducive to timber pest activity, and the management system that's in place for termites. So although that covers a lot of knowledge, the main one we're looking for is timber pest activity, primarily termites, right? So termites can cause a lot of damage. I've been into properties, found termite damage extensive that I would say it was close to knocking down the home. I would never buy a home unless you're planning on knocking it down without a building and pest inspection, right? I have heard of people buying it. The place has been riddled with especially in the recent market where things were going crazy without a building and pest inspection, and then they've had major, like hundreds of thousands of dollars worth of damage in their property. So not worthwhile not getting good advice. It's just like Maryanne was talking about. Have a team around you when you're doing this to help educate you and understand what you're going into. Termite protection, often what happens in newer homes, it's been put in the building, but it still needs to be inspected every year. In older buildings, often we find that it hasn't had termite protection for a long time. It increases the risk, but what we're doing is looking at the house now, and then potentially if you do buy, really think hard about spending the extra money on protecting your home from termites. I can't stress that enough because I've seen the damage that happens, and it can easily cost you tens of thousands of dollars to get repairs. Insurance doesn't cover termite damage, so you understand. Right? We won't tell you whether you should buy the property or not, and nobody else here will or should anyway, right? Because at the end of the day, that's got to be your decision. I'm going to give you an opinion on my opinion on the home as is, right? And the condition of it. But I'm not going to say to buy or not buy. There's different questions you should ask. You should ask, what do you believe the condition of the home is if you're talking to building a pest inspector? It's not an estimation report. In the standards, it says we shouldn't provide an estimation of the works, right? People see the report and it says, get an engineer, get something else. It's because we're required to do that by the standards, right? We can sometimes give you a ballpark, but it's not an accurate quote. The best thing is to talk to us about whether we think it's significant, and then maybe look at getting somebody in to quote. It's not, when I say it's not a negotiation tool, for me, I really don't believe it should primarily be used as that. Some people do, but probably investors, right, who are going to use it as a primary negotiation tool. Use it for information about understanding what you're buying. That's the most important thing. And please read your report. We don't go out there and do this for you to go, oh, okay. It's important for you to understand what's in there. And especially with us, please give us a call if you don't understand something. It's simple. Ask the questions. If you're a first home buyer, don't go and buy the first home you go see, right? Get a feel for the market where you're going to. Go to some open homes, get some understanding of prices. If it's the first home you turn up at and you want to put an offer in, yeah, or just back off and talk to somebody. Okay. Enjoy the rest of the night. Thank you.
Now we are hearing from the lovely Pavey from At Realty. Pavey has lived locally in the Logan area since the early 1980s, and during this time, she has completed many renovations, developments, and building projects of the area. The experience that her clients can benefit from extends beyond sales and marketing and into true expertise in the property industry. Pavey is speaking to us tonight about purchasing a property and what to look for.
Thank you, Maryanne, and welcome everyone. So what I thought I would talk to you about is the most frightening thing for a first home buyer is price. How do I know if I'm overpaying for the property? Where do I go to look for values? Things like that. So what I've done is I've pulled the median prices for all the local suburbs. So like Shayla Park, your median price for houses is $710,000 for a 3-bedroom house. A unit is $430,000. Springwood at $745,000. But if you want to go under the $650 mark, then you're looking in Logan Home, $550,000, Woodridge, Kingston, Logan Central. So you do have options, but you can take a photo of this after we finish, if you like, so that you can get a good idea. So in 2022, obviously we had massive growth. There was about 36% growth in the local market. And that's pulled back about 10%. So we're sitting at around 26% growth in the 12 months of 2022. So use the median price as your barometer. So if a property is really run down, it's a renovator, you want to be paying under the median price. If it's in really good condition, well maintained, then you're going to expect to pay above the median price. And how do you find the median price? Go onto realestate.com. When you look at a property at a listing, go down the listing and there's a little tab on there on realestate.com that says suburb profile. So you go into that profile, and if you're looking at a 3-bedroom house, it'll tell you what the median price is currently in the area for 3-bedroom houses, units, what the average rent is. So that gives you a really good idea of where the values are sitting in the market at the moment. So the options, as Janet discussed, maybe if the prices have exceeded your budget in the areas that you want to buy in, maybe rent in that suburb and buy in a suburb that you can afford. So if you prefer to live on this side of the highway and be in Shayla Park, Cornubio, Springwood, rent in those suburbs and then buy in Loganholme, Tanamera. Eden's Landing even is a great suburb for investors because you've got good quality properties there that are a little bit newer. So how do you know what the prices are? The sold price is the most important thing. So when you're going to open homes, you're looking at the prices, and a vendor can ask whatever price they want. So the for sale price is not the important price. The property that it sells for, the price it sells for, is your sold price, and that's where the values come in, and that's where all the valuers for the bank to make sure that you're not overpaying for the property once you've got it under contract. That's what they look at. So look at your sold prices. And when you select the suburb that you want to buy in, become the expert in that suburb. Have a look at all the open homes. Don't buy the first property you look at, as Les said. Make sure you look at quite a lot of properties, see what the features are, have a guesstimate yourself of where you think it will sell at, and then have a look at the actual sold price. And then keep a list or keep an idea in your head of where the properties are selling for. So then when you find the property that you really love, you know where the value is sitting roughly and you can make a reasonable offer. And then new properties pretty much go live every Monday. So when you're in the market, I can tell you right now, up to 650,000, the market is really strong. There's a lot of buyers in that price bracket. So if you want to get in to a property in that price point, you've got to be on the ball on the Monday, see all the new listings that come online and try to get into them before the first open home. If you wait for the first open home, sometimes they're already gone, because if buyers agents are looking in that area, they're getting in and getting that property locked down before the open home. And some agents are lazy and will just take the first offer because it's in the range that the owner wanted and it's easy for them. So get in there, make sure you're in their ear, and make sure it's not going to go before you view the property if you really like it. So what to look for when you're buying a property. When you go in and inspect it, look at the overall condition, make sure it's well maintained, look for obvious cracks in the walls, the ceilings, have a look around, because I know when you walk in you think, oh, I love the furniture, but the furniture doesn't come with the property. Remember that. A dining room is just the walls and the floor. So look down at the floor, make sure there's no cracks in the tiles, make sure there's no obvious cracking in the walls. Visually look at if there's any holes, like walk around the outside, look at the roof, make sure there's no holes or cracks in tiles. Look at the gutters and downpipes, make sure there's no holes in them and water obviously coming out on the ground and into the footings. Look at the kitchen cabinets, open some of the doors and drawers and make sure, because sometimes they look beautiful on the outside, you open the door and all the shelves are falling apart and the timber's exposed. So have a look at that. And then check over your bathroom, look at the tiles, look at the shower screens, check for any cracks, things like that. So what should you include on your contract when you go and find the property that you love? You've got an offer that's accepted. What do you want to include? First thing is your finance clause. Even if you have pre-approval with Maryanne, you still need to add your finance clause, and usually around 21 days is sufficient for the banks to get that through. But you definitely need to have that in there to protect yourself in case the valuation doesn't come in at contract. You want to be able to pull out of that sale if it's, a big difference. Obviously, the building and pest clause, and usually 14 days. How long are you taking to book in at the moment, Les? Are you about 7 to 14 days out?
Is okay if they need to, but generally 14 gets...
Yeah. So 14 days is usually acceptable for most sellers. If you're buying in a unit, you do have body corporate. So body corporate fees is an additional fee that you pay on top of your council rates when you're buying a unit. And you want to put in a due diligence clause. So that's a special condition that you add because you want your solicitor to check that all the fees are up to date, that there's no levies about to be passed on to the owners because the complex is doing an upgrade. Maybe they're painting, they're replacing all the gutters, they're replacing roofs or something like that. So you want to make sure that your solicitor's checking for any big expenditure that might be coming up. If you've got a pet, a dog or a cat, and you're buying in a unit, you need to get body corporate approval for that pet. So make sure that you put that in as an additional clause in your contract so that you can pull out if your pet approval doesn't come through. And usually around 10 kilo dog is acceptable in most complexes. If the property is leased, so there's a tenant in the property that you want to buy, check whether you're going to have vacant possession or you're going to take the tenant on. If the tenant's still got a lease to run that's about 6 to 8 months, consider whether you want to take that tenant on for that time. Check how they're living. If the property is fairly well maintained and you can see that the tenant is looking after the property, then it's not an issue taking them on. And then you collect that rent, and that can perhaps help pay for your body corporate fees, for your council rates for the year, and help with your costs going into the property. And I think you can still get some of your grants if you're moving in within a certain amount of months. Maryanne, is that correct? Yeah. Within 12 months, there you go. So you can take on a tenant for up to 10 to 12 months at the most. And settlement, usually 30 to 45 days is standard, but if the tenant's got 2 months of a lease left and you want to get vacant possession, which means you want to move in and it be vacant, then you can do a longer settlement of 2 months to allow for that time for the tenant to move out. Or sometimes the seller needs more time than normal because of their circumstances and where they're going. So always check what the owner wants because that might be more attractive to them. When you find the property that you really love, Logan City Council have a really great service where you can go onto their website and it's called PD Hub Online. You put the property address into the search engine and it will give you a description of the property and the block that it's on and whether there's any flood overlays, any approvals that have been given for that property in terms of extensions, patios, things like that, garages. So that's a really valuable search tool. My son is looking for a property at the moment and he found one in Slacks Creek, and now I know it floods. If you all live in the area, you know it floods down behind IKEA and all through the car park. And I thought, I know that property backs onto a creek. I said, don't do anything until I look at it. I had a look. There was a 45% flood overlay on the block. Now, the particular agent that was selling the property had advertised that there's, it's a big block, so there's space for 2 granny flats and you can get a rental income of X amount of dollars. It's a great return. Now, if you've got a 45% flood overlay, you can't even build 1 granny flat, let alone 2. Zoning only allows for 1 granny flat to start with. So all their advertising is wrong. So do your own research. Don't rely on the information that is there on the day. And the most important thing is be respectful. Owners take big pride in their properties. And if you go in and trash talk them and they hear that, they can be offended and knock back your offer. purely because they're offended by what you said. So just be respectful. So that's it from me.
So now we've got Carolyn Ryder. So Carolyn is the owner of Ryder Lawyers in Daisy Hill, Queensland. She's been a lawyer since 2003 and helping clients with property transactions, family law, wills, estates, and commercial law. Her office is a friendly, progressive, and child-friendly. She's well known in the local community as the ethical, high, knowledgeable, and kind solicitor who expertly guides home buyers through conveyancing transactions.
So hi everyone, I'm Carolyn Ryder. I've been a solicitor for 20 years and I'm based here in Daisy Hill. I have a small practice, so it's just myself and my assistant Brenna, who's training to be a solicitor. So the perks of having me along today is it's very rare to actually have a solicitor speak to you about conveyancing, because in most firms, conveyancing work is farmed off to more junior staff. But in our business, we do it differently, and I'm actually actively involved in conveyancing. So for a lot of clients, conveyancing is their first touch point with a solicitor in their life, and we want it to be a good experience for you. Unlike in other states, conveyancers can only be employed by law firms in Queensland. So even if you think you're employing a conveyancer who has their own firm, they're aligned with a law firm. In New South Wales, it's different. Down there, we can have licensed conveyancers who can work on their own. But in Queensland, the intention is that they're supervised by solicitors. Unfortunately, that's not always the case.
Conveyancing solicitor can help you with a number of things. We can give you advice before a contract is signed. Unfortunately, only about 1% of buyers contact a solicitor before they sign their contract, and they can sometimes get into trouble if the agent that they're working with isn't as ethical as someone I say behaving.
We can help you with due diligence. So that's a fancy way of saying searches, inquiries, and investigations. And you can do some searches before you buy a property. We can help you with contract review. So this is an example of our standard contract in Queensland, and I'll show you some important sections of that in my talk today. We can help you with meeting contract timeframes. We help with liaising with your mortgage broker and your lender to make sure that your mortgage broker turns up on the settlement day with the money that you need to buy the property. We're the person who arranges the settlement, and we perform the settlement, these days settling in our online platform that's called PEXA. So you might hear that term bandied around. It's our new platform that is going to be mandatory from February for all conveyancing transactions in Queensland, except for some excluded ones. And we also help with dispute resolution. During conveyancing transactions, disputes will arise. Perhaps there are issues that come from your building and pest inspection that need negotiation, and your lawyer can help you negotiate with the other side and the agent in that regard. And sometimes a person will decide that they don't want to do what they've agreed to do in the contract. And that's where it's really valuable to have a solicitor involved as well. Hopefully you don't need our help with that part. So the REIQ contract in Queensland. The REIQ means the Real Estate Institute of Queensland, and this is the form of contract that the Queensland Law Society and the Real Estate Institute of Queensland have negotiated and agreed together, and it's our recommended form of contract in Queensland. If you go to put an offer on a property, you might see a version of the contract floating around that is not this contract. The Law Society recommends that you only use this contract in Queensland. So if you are buying through an agent who doesn't use this contract, you're well within your rights to ask that this contract is used, and they're freely available if you contact any solicitor in Queensland. So the most important thing to know about this contract is that time is important. Any date or time frame that you agree to in this contract is extremely, extremely important. They call it essential. So if you say that you're going to pay the deposit on the day that you sign the contract, you've got to do it that day. Even if you sign the contract at 11 p.m. at night, you have to pay the deposit that day. And also, if you say that you're going to take only 7 days to get your loan approval through, you need to get your loan approval through in 7 days, or you could face losing that property. So we've already spoken about some time frames. Take some guidance from Maryanne and from the real estate agent when you're negotiating those dates with the seller. And remember, as a buyer, signing this contract is a negotiation. It's not just what the seller says goes. That market we were seeing definitely last year, but it's different now. Times are changing. I'm certainly seeing sellers are more open to longer settlement timeframes. People are a bit more realistic about how long it takes to get a loan. Perhaps 20 years ago, we could get a loan in 14 days, but at the moment, I think that's unrealistic. A lot of buyers need at least 21 days in my experience. So what is your role in conveyancing? Yes, just because you employ a solicitor, it doesn't mean that you found someone and it's all hands off and you get to just start shopping on Temple and Webster for the furniture that you're going to buy. Clients we find as first home buyers are surprised about how active they need to be involved in the conveyancing process. Lawyers will tell you what it is that we need you to do and the forms that we need you to fill out, but we need you to actually do those things. We do try and explain it, but for most people, the process of receiving hundreds of pages of paperwork can be a bit overwhelming, and we certainly offer face-to-face appointments to go through paperwork if you find that a bit tricky. So there's lots for you to do. The most important thing is your lawyer will ask you to be available to give them instructions. So a lawyer can only act on the directions that a client gives them. We can't make decisions for you. We can't decide what we would do in your situation. We have to give you advice, make recommendations, but ultimately the decision is up to you about every step of the process. So are you happy with your loan approval? Are you happy with the building and pest report that you got? I can't tell you whether you should buy a property or not based on a building and pest report, but I am very good at giving my opinion on whether people should proceed to buy properties. And it's certainly a service that we offer to existing clients who are in the property market. If they're looking for a property, particularly we find like for people who are perhaps single people buying alone, they don't have a partner to bounce these questions off. We invite clients just to call our firm and have a chat with me about the property that they saw on the weekend and that they love. More often than not, they just want me to talk them out of it. And I'm very happy to do that. But we do happily look at the property on realestate.com and do a few of those quick searches with the Logan City Council, checking the flooding to make sure that, it's a property that's worth pursuing. So in Queensland, it's really important to understand the pricing that goes into your conveyancing quote. So you'll see signs around the suburbs that advertise conveyancing from $395. I can tell you now, using the search platforms available in Queensland, you cannot order the searches that the Law Society recommends for that price, let alone pay for a solicitor. So that might be a base price, but there will always be added costs on top of that. Some firms will give verbal quotes over the phone and then you get their written price at the end, and it can be very different. We try and operate differently in our firm. We only provide written quotes, which are generated by our software system. So clients can call up if they found a property that they like, and we will key in the address. It will pull through all of the relevant searches for your council area, show our fee, and show any government fees such as registration fees, transfer duty. And we're normally right to within about 5 cents. So and you don't have to buy the property with us to use that service. It's actually a link on our website. There's a free conveyancing quote link that you can use at any time or any hour of the day or night if you're wanting to work out what the transfer duty is, which is like stamp duty. Say you're buying a property over $500,000, you can just hop onto our website and use that conveyancing calculator and it'll tell you what those costs are. Obligation free. And I promise I don't call everybody who generates a quote on my website because I don't have the time. So in Queensland, when you buy property, whether it's a house, a unit, commercial property, it is buyer beware. Unlike in other states, which have a disclosure regime where the seller has to give you information about a property, in Queensland, we don't have that at the moment. There's talk about that coming later this year. The Law Society is working on it at the moment with the Property Council, but it's not here yet. And there are two important holes in this REIQ contract that you need to be aware of, and Pavey has touched on them today. So Pavey has spoken about flooding, and then Pavey has also spoken about building approvals. And so in this REIQ contract, which is the recommended contract in Queensland, there is no promise by the seller that everything that they've built on that land has approval from council and final inspections. There's no promise the house has approval. There's no promise the shed has approval, the swimming pool, the retaining wall, the granny flat. So the property that you think is a 5-bedroom property due to a major extension with additional bathrooms may, in effect, be only approved as a 1983 bedroom house worth perhaps half of what you're paying for. And so the reason that there's no promise in the REIQ contract in Queensland that all structures on the property have approval is because we love to DIY in Queensland. Everyone is a home renovator. We like to flip houses. We like to add on sheds, decks, carports without council approval. And the councils probably couldn't handle the amount of work that would come their way if everybody decided to apply for approval of all the structures that they're building. But if you're buying a house that looks like it has had some renovations and it's been expanded, it's really important to have a bit of a check to see whether those additions are approved, or put a special condition in the contract that says that you want to investigate that and have the right to pull out. So you'll be asked to sign this form of contract, probably by DocuSign these days. So DocuSign makes things very convenient. It also makes it very hard for you to understand what is in this contract. Some agents will take care completing the contract for you, and some will not. Unfortunately, lawyers don't generally get a look in when contracts are being prepared because they aren't sent to us. We're just the ones that have to make it happen. The most important things to check are, is your name spelt correctly on the contract? The first page contains all information about the seller. You will be the buyer. So if there is one of you, there will be one buyer. If there are two buyers, there will be two buyers. It's important to use your legal name, so the name that your passport is in, your driver's license, your ID is in. Otherwise, we might have to correct your name later on. If you've already picked a solicitor, your buyer's solicitor information will be entered in here. You can ask the agent to do that. Real estate agents often have associations with solicitors where solicitors will pay them finder's fees for referring clients to them. So be aware that if you're accepting a referral to a solicitor that the agent recommends, they may or may not have been paid a fee for that referral. We don't accept paid referrals at my firm, but you can ask that question, was that lawyer paid a fee for this referral? Down here, this is where your property is going to be described. Every property in Queensland has an address. It has a real property description. That comes down here. Lot. It'll be a lot number on a plan, and they'll fill out the area for you in here. So if you think that you're buying a property that's 800 square metres and the number in there is 600, then that is an error. Pause before you go further. Present use. If you're buying a property to live in and you think it's a home and the present use is shop, commercial, pause. Next page is important. By now, you're probably quite excited because you've seen your name on the contract. You've seen the seller's name and you think it's going to happen. Excluded fixtures. These are the things that the seller is going to take with them. So fixtures are things that are already screwed on or fixed to the property. They could be a shed. They could be pool equipment. They could be plants in the garden. Could be curtains. Dishwasher, microwave, spa. So excluded means the seller is going to take that and it won't be there for you to use. Included chattels. So chattels are things such as if you take a house and you tip it upside down, everything that would fall out of it, that's a chattel. Okay? So usually it's the owner's belongings. So examples, so these are the bonus things that the seller's going to include for you that they might normally take. It might be a wine fridge, could be, so generally they're just things that are added in. Sometimes things like air conditioners will be included in chattels, even though they're actually fixed to the property, but there's no harm done with that. Okay, then we have deposit holder. This is the person who's going to hold the deposit that you pay. It has to be someone who's got a trust account in Queensland, because a trust account keeps your money safe until settlement occurs. In here is where price is negotiated. These days, because the negotiating occurs through the agent, normally the price that's in there is the price that's been agreed by all the parties. And then in here, you're going to put your dates for finance and building and pest inspection. The finance condition only works if you fill out all three of those boxes. So don't just fill out 1 or 2. All 3 have to be completed, because it says here, unless all of those are completed, this contract is not subject to finance. That means you're a cash buyer. So if an agent fills that out with only 2 boxes, insist they fill out all 3. You can just put bank or lending institution, buyer's choice. Finance can be as we need to complete, or if you know the amount that you want to borrow. And then you'll put in here your inspection date. Okay. Sorry, I'm taking a little longer. Then we have our title encumbrances section. It's down the bottom, but it's certainly important. Encumbrances are things that are on the title of the property, and the ones in this box are the ones that are going to stay when you buy the property. So if the property has an easement over it, so the council has a sewer line, or Energex have underground power lines through the property, that encumbrance should be listed here so that you know the property has what they call a bit of a defect in its title. Just because I use the word defect doesn't mean that it's a bad thing. It's just the legal term that we use. But the agent should pull this information from the title search that they perform. And if they don't, then in some cases you have the option to pull out. If there's a tenant who's going to stay in the property, so this section will be completed if the property is sold with a tenant living in it. If the tenant is moving out before you buy it, there should be no tenant listed there. Okay? The selling agent's told you the tenant will be out before settlement. There shouldn't be a tenant there because that's the tenant you're taking on. And then, Narry Queensland, the seller has to give you information about pool safety certificates, whether we have smoke alarms installed and whether the property has an electrical safety switch. Thank you. Then there's some sections on GST, which probably won't apply to you as first home buyers. And then last but not least, special conditions. It's on the last page, which is really inconvenient because these conditions are the additional things that somebody has decided to put into your contract. That somebody, usually being a real estate agent, usually who's not working for you. And so if you see something in there that doesn't sound right, it's more than just something about the parties are going to use DocuSign and everybody agrees to settle electronically in PEXA. If you see something in there that is a bit exotic, that's the moment to pause and to think, I need my solicitor to look at this before I sign. And you can forward emails sent to you in DocuSign to a solicitor to look at. And then down here, you'll agree your settlement date and your place for settlement. Place for settlement, we used to have to settle in the city, in person, or in the Gold Coast or Sunshine Coast. We used to travel around and do in-person settlements, and it was a bit like organising a party. And everyone had to be there at that time on that certain date, and the money had to come by cheque that had been printed earlier in the day. We'll probably see place for settlement phased out now that we're moving to solely using PEXA, the online system. But at the moment, you can write PEXA or you can write Brisbane in there, and your settlement date. Minimum of 30 days for a settlement is what solicitors recommend to get your searches back in time. If you'd like a bit more of a leisurely, stress-free timeframe, 45 days. Things that can go wrong and why you need a good lawyer in conveyancing. I thought I'd give you some of our greatest hits from 2022, and the reason why it's worth engaging really good specialists like the ones that we have in the room here today. We've had sellers refuse to move out on the settlement day. We've had situations where your bank doesn't bring along enough money on the settlement day. We've had, in a rapidly moving market, sellers refusing to sell or trying to make you breach the contract by being late on the settlement day so that they can sell to another buyer for a higher price. We've had total property destruction by flood 1 week before settlement, with the seller trying to insist that you settle. And these are just an example of some problems that can happen where a solicitor can help you, get out of contract hiccups. So thanks for listening, everybody.
Let's talk to our last guest. To finish up, we have our very own, once a client of 360 Mortgage Solutions, but now broker, Tara. Tara's come along tonight to share with us her recent experience on her home buying journey and the reasons why you should consider a broker and the reasons she ultimately became one herself.
So I'm Tara. I do work for 360 Mortgage Solutions, but I haven't always been a broker. So I was self-employed as a family daycare educator. I single mum to 2 kids. So to buy a house is not easy. I did originally go to a lender and not using a broker. I had done research with multiple lenders to see if I could service a loan. But COVID hit right when I'd saved my deposit for my home. I had a land contract, I had a build contract. I was fairly confident I'd saved a good deposit. I was fairly confident that I was going to get approved. I was moving an hour away. I was moving my business. So it was a big deal. But when COVID hit, all the lenders were saying, no. I had spoke to a broker for quite a few months. And they're like, they backed me to sign my contract on my lands. And then right at the last second, I'd done my tax returns, everything was in place. And then he's like, nope, I can't help you. And I was like, okay. So I looked into it's called the First Home Guarantee now, but it never used to be called that 2 years ago. And so I went straight to a lender that was approved for me to apply for that. So I didn't have to pay any lender's mortgage insurance. But going straight to a lender, I didn't realize was so much different than going to a broker. So for me to apply, I actually had to pay a fee. And my application was pretty straightforward with the process, but I didn't get any communication. So it took about a month for them to decline my application. And if I wanted to speak to my broker, most of the time it was about 10 o'clock at night, he would email me that I'd probably emailed him about 3 days before. And then I finally get a reply. And then he had to give me the phone call to say that I was declined. So I was devastated, obviously. But I was talking to a friend, and a friend actually recommended Maryanne. So I had spoke to her. I was really hesitant. I didn't want to apply again. I was shattered. I'd worked 2 years to save my deposit. I was working 60 to 70 hours a week to save my deposit, and then for someone to say no. So, but after speaking to Maryanne, I did end up contacting her again. I think it was only a day later. I said to her, okay, I'm going to do this. And she's like, are you sure? Because she knew I was quite hesitant. And I'm like, yeah, I'm sure. I'm going to do this. So we applied. Yes, it was a struggle still. But I had Maryanne to help me along the way to choose a lender. So I didn't have to just choose one lender and go, okay, I'm going to go there and do it myself. I got multiple lender options. Maryanne had done all the research, everything for my situation, not for anyone else's. And then I would probably say it was still probably about 2 to 3 weeks for me to get approved, but I did get approved. I did have to tweak a few of my finances to get approved. So I had to pay off my car loan, which I had the money for it, but it would have meant I would have had a bigger deposit to to build my house. But I still had, probably just under 10% deposit, whereas I would have had close to 15% deposit if I didn't have to pay off my car loan. But Maryanne come to sign my loan docs with me, and I was like, oh, maybe I could do this. I was like, I want to help other people. It's been such a struggle for me. I'd had determination all the way through that all I wanted was to have my own home. I didn't care if I was a single mum. I didn't care that I had 2 kids. I was self-employed. Like, I had everything all worked out already. And yeah, I was like, okay, I want a career change. I want something different. I'm going to be in my own home. I've actually got approved for this house. I'd fully customized my build, and everything was in place. And I was like, well, I don't want children running around my house. Like, it's going to be a brand new house. I don't want children running around my house anymore. I actually did design my house specifically for family daycare though. And then, but I'd probably say about 2 months into my build, I decided that once I moved, I wanted to change careers and look into that. So, but it's not easy. I'd been a family daycare educator for 9 years when I did actually give up last year. But Maryanne come to sign my loan documents and I was like, okay, maybe I could do this. So I actually went away, it's probably about 3-4 months later. And I said to Maryanne, I've actually applied to do my course so I can be a mortgage broker. And yeah, she was like, no way. But yeah, so I did my course. My build finished. I moved into my house. I continued doing family daycare. And then I was working with Maryanne as well. I was doing the both. And then I was like, no, something's got to give. So I gave up family daycare, got my house back for about a week or two. And then my sister moved in with 2 kids, and she was pregnant with her third. But anyway, that's how I became a mortgage broker. And that's all for me. Thank you.